What's up everybody, Nate here, and the car market in the United States is currently undergoing one of the biggest shifts in its history. We have seen over the last couple of years used vehicle prices and new vehicle prices going way up. That is partly because of low inventory and really high demand caused by excessive money printing and really low interest rates. This kind of created some other big problems though for technology and cars in general, because then we had a huge chip shortage and a semiconductor shortage. So these are things that are vital to creating new vehicles, and that made it even more difficult to actually create new vehicles, which made inventory even smaller and sent prices even higher. Things have started to change and improve slightly in the United States though, with the newly passed CHIPS Act from Congress, and also President Joe Biden kind of making an executive order limiting a lot of the chip producers in the United States from outsourcing and sending a lot of their chips to other countries, namely China. That means we're going to have a lot more chips and semiconductors for vehicles here in the United States, and that means inventory is largely going to go up because these automakers can build more cars. The problem is nobody can afford cars right now. Inventory for vehicles in the United States has improved, but what we're starting to see right now is a lot of dealerships reporting that cars are just sitting on their lots with nobody able to buy them. With nobody able to buy them, that creates a liquidity problem for a lot of your major auto companies as they start to kind of produce the next generation of vehicles. The issue is if they don't sell the vehicles that they have right now, they're not going to be able to fund the future of vehicles in the United States. Now, what you're probably thinking is, well, this isn't such a big problem, right? Because cars are not a number one necessity. And if you live in a big city like New York or LA or Chicago, then having a car might not be the end of the world. There are other ways to get around, but the vast majority of Americans do not live by major transportation resources, and they need a car. So without the ability to get around, this kind of bleeds into a lot of other facets into our economy, lack of spending, and Americans spending way more than they probably should on vehicles right now. And today I want to kind of break all of this down, go over what is happening in the auto market today, how we got here in the first place, and what exactly is coming next for auto manufacturers, cars, and our economy. So right now in the United States, we do have cars coming back onto dealership lots, but like I said before, the problem is nobody is able to afford them, and the problem is twofold. The first is something I've been talking a lot about on this channel, that is interest rates going up by the Federal Reserve. The Federal Reserve is making it a lot harder for businesses and consumers to borrow money right now. So as those interest rates go up, millions of Americans are just disqualified from getting an auto loan. They simply can't afford the payment. The second option has to do with the auto companies themselves. The auto companies are trying to figure out how to make the most money right now, and with prices going up for every single vehicle, the auto companies are not just making all of their vehicles at once right now. They're actually only trying to create and sell their most expensive vehicles. These are high ticket items and they cost the auto manufacturer a lot to make, but they also bring in the most money. So with shortages going on and supply chain issues, the big auto companies are thinking, well, why would I try to make something that isn't going to make me that much money? They're only focusing on your brand new top of the line vehicles. So this is kind of a concerning issue for consumers and auto companies. For consumers, many of them are just opting to not get a new vehicle right now. Many of them are trying to look at used vehicles, but the problem with used vehicles is they are pretty much comparable in price to a new vehicle. So that means getting a used vehicle is still really difficult in the United States, especially with financing and interest rates going up as well. In 2021, a lot of Americans could actually overpay for a car because they didn't have a really high interest rate. The interest rate was near 0%. So a lot of people were going to overpay for a vehicle, and they were going to give that money directly back in principal to the dealership and the automaker. But now with used vehicle prices still pretty high and interest rates also going up, many Americans simply just can't afford it. It's kind of twofold. What we're also starting to see in the auto market is financing increased for Americans. People who have decent credit that are able to get a car right now are basically financing near 100% of their vehicles. So they don't have really any money to put down, but they're still making monthly payments that they can barely afford. It makes sense from the automaker's perspective and the dealership because they want to try to make as much money as possible. They would rather take the risk of somebody defaulting on their loan problem than to not make a sale at all. But so far in 2022, this has been a growing problem, and it kind of bleeds into other aspects of our economy as well. Earlier this year, I made a video on car repossessions actually starting to jump all throughout the United States. And a car repossession means that somebody took out a loan for a vehicle, and the collateral for that loan was the vehicle itself. And if somebody isn't able to make their payments anymore, the bank or the dealership actually takes back that vehicle. So when we say repossessions are jumping, that means that we have Americans that can no longer afford their auto payments anymore. And what this came down to was a lot of Americans overexerting their finances in 2021 because of really low interest rates and stimulus. Not only stimulus in 2021, but back in 2020 as well. What you've got to remember is stimulus in the United States did help out a lot of lower income individuals who really needed that money to go out and buy necessities, but there was also a lot of Americans, a really good chunk of them, that didn't need that money to begin with. They didn't lose their job, and all of this extra money was just spending money. They went out and bought a new car with it. That couple $1,000s that they got from the federal government, well, that was their down payment plan for their brand new car. So they went out and got a new car, probably something that they really couldn't afford to begin with. And now in 2022, these banks and dealerships are starting to take back their vehicles because the people that bought them in the first place can no longer afford them. Now, the reason that people can't afford their cars right now is for a variety of different reasons. We're starting to see massive layoffs from businesses, and inflation is holding steady at around 8% in our economy. So people are spending a lot more of their income on housing costs and rent and groceries and energy right now, meaning that they don't have the income like they did back in 2021. And when we start to see repossessions go up in the United States, that means that other things are slowly going to fall. It's basically the domino effect. The auto market is basically the start of the dominoes, because when people start to have really bad financial troubles, their car payment is usually the first one to go, because it's really bad to not have a car, but there are other ways to go around, and most people have some other means of transportation, whether it be Ubering or whether it be just a friend that they can borrow their car from. But repossessions show that Americans are having really bad trouble with their finances right now, and then that's going to trickle into other markets. Usually the last one is the housing market, because at the end of the day, people need a place to live. And when a car is repossessed, well, now that debt is not going to be paid. So now all of these banks and dealerships that loaned all of this money out, they're not getting that money back. So now they have a car that is way overinflated in value, but nobody wants to buy it. And like I said at the beginning of this video, this causes a concern for a lot of Americans, because many Americans get around with a car. It is their number one and only major transportation resource. If their car goes out, well, think about what that actually means. That means they're not going to be able to go to work. It means that they're not going to be able to go out and spend as much money, and it means less money for gas, and it means a lot less money for other upgrades in the auto industry. The way I see it, having a car is nothing but an expense in the United States. It only costs you money, and it pretty much never makes you money. So that means that Americans are most likely going to be holding on to their used vehicles for much longer than they probably should, simply because they can't afford a new to them used vehicle or a brand new vehicle. And that means they're going to have to sink more dollars into repairs and decrease the value on those cars even further. And down the line, when everything kind of resets in our economy because of interest rates and the auto market finally getting more inventory, this means that all used cars on the market are going to have even less value, because they're all going to have so many miles on them, and they're all going to have so many other issues that Americans simply cannot afford right now. And let me tell you something, the longer you have a car, the more issues it has. And if this continues for the next 5, 6, and 7 years, every single American is gonna have bigger payments that they put on a car, which means less saving and less discretionary spending for other things in our economy. But the other issue that is coming on the automaker side is now these automakers are trying to go towards an electric future and vehicles that have a lot less carbon emissions. And the only way that they're going to get there is by making sales and making money today. So it's kind of ironic, but the gas vehicles that automakers are producing right now are actually fueling the electric future that they want to get to 10, 15, and 20 years down the road. But they're gonna have a lot harder of a time getting there because they're not making any sales in new vehicles right now. And even though they're producing some more vehicles vehicles today, there's still around 50% fewer new vehicles actually being created than just 2 or 3 years ago. And it's changing the ideology that Americans have around vehicles in general. Used vehicles are going to be the norm for just about everyone, and new vehicles are going to be seen as a luxury for only the ones that can afford it. Fewer and fewer Americans are going to be buying cars, whether it's used or new right now, and the ones that actually can afford it are going to be financing near 100%. Now, we are starting to see certain aspects of our economy faltering, with businesses laying off people, unemployment set to rise because of the Federal Reserve's policies, and debt increasing. Well, now you have the risk of repossessions going up because Americans are not going to be able to afford their car payments if they lose their job, if inflation keeps going up and they have to allocate more of their income on the most important things like feeding their family or keeping their shelter. And with many businesses not able to take on investor money or debt right now because of rising interest rates, that means that they're solely relying on consumer sales. And the auto industry in the United States employs several million people. And if there's no sales or no investor interest, that means we are about to have a major collapse in the jobs market and in the car market. Now, like I said, you'd kind of expect car prices, especially new car prices, to come way down in our economy because nobody is buying cars. That's basically how supply and demand works. If you have something that is extremely expensive, but nobody is able to get their hands on it, well, then the price will have to come down to a place where somebody can actually afford to purchase it. But that's not really how this is going to go down in the car market, because these automakers are creating really expensive cars that are really expensive to make because of manufacturing shortages, labor, and also chip shortages. So they have to keep the sales price high so that they can make a profit off of these vehicles, which is only going to attract your high-end customers at the end of the day. Used car prices coming down is a really good thing for our economy because it shows that people are unable to afford the prices that used vehicles are set at right now. But the problem is twofold for used vehicles and new vehicles, because all of those prices are going to have to come down, and they're going to have to come down significantly because costs for everything for Americans are going up like crazy right now. Americans are spending too much on groceries and energy and their shelter in order to afford new vehicles. So auto manufacturers are going to have to lower their prices even more. And if interest rates from the Federal Reserve continue to rise rapidly and aggressively over the next 2 years, that's going to keep even more people out of the auto market, meaning that prices have to fall even more. And this is all going to mean that these auto companies are losing tons of money on every single car that they sell, and that's going to bleed into their own business with jobs and into our economy with people trying to get from one place to another. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.